Well, hello and welcome, traders, to another skill development trade bench entry. That's what I'm going to start calling this, right? Trade bench entries. We are on our way through the non-directionals, hitting the diagonal spreads. Folks, this is going to be very, very similar to the horizontal spread you learned last module. In fact, identical. The only thing we're doing is putting in different strike prices. So let's jump right into it and get going. First off, guys, let's jump to the Learning Center. Let's go to our non-directional module 3, diagonal spreads. This is something that I use quite often, to tell you the truth, folks. The diagonal spread is probably my, you know what, I was going to say second favorite, but I think it's pretty much my first. Very close second to the butterfly spread. But let's take a look at the diagonal spread, since that is the topic for today. Let me pull up the PDF here for the diagonal call spread. As you can see, it is a 0 to +2, where the horizontal was a 0 to +1. The horizontal call spread, all things being equal, right? So we want to buy the long call with 1 month plus to expiration, very similar to the horizontal. Sell short call matching the time frame of the target. This is going to be a little bit staggered. The only difference is, instead of selecting the same strike price, we're going to do different strike prices. So let's jump right into Trade Bench and see if I have already built a diagonal call spread strategy, or if we can build one together here in the class. So let's jump into the strategies through a configuration once again. And I'm looking for diagonal call or diagonal put spread. Oh, looks like I've got one right down in the middle here. Diagonal call spread, and just below it is the diagonal put spread. So I already built those. Now I know what I don't have is a checklist. So let's go ahead and build a checklist together, and then we'll come back here and attach it. Now, just like the horizontal spread, folks, I'm going to make this a checklist that works for both. So the first thing I want to do is I'm going to call this diagonal, see if I can type this, spreads. And this should be able to have the same rules for both, right? Because it's just going to be buying one, selling one. It's either a call or a put, but they both have the same rules. So let me go and edit this, and let's add a new checklist item. The first one is going to be buy the long strike, with +1 months of expiration. Now, what's interesting, guys, to reteach the same class, the reason why we're just doing 1 month is because we don't want the time decay to hurt us in the back leg while we're benefiting from the front leg's time decay. This 1 month more expiration is going to be basically, it's going to turn into a call or a put. So once that front month expires, you're going to be left with a long call or a long put, hence the diagonal name, and then you can just take it based on targets at this point. So if you know that you want to maybe keep this longer, you just need to buy maybe more than a month. So keep that in mind. But I'm going to say I need at least a month when it comes to my time frame. That's what I love about these, is whenever you get to the types of combos that are targeted, things that you can just take once they reach a price objective, it gives you that lenience. You don't have to quite wait all the way through the expiration as you would, say, a vertical spread. So they're kind of nice. That's why they're my favorite, one of my favorite combos. So let's take a look at the next one. Let's add a new checklist item. Aha, this is easy. We're going to sell the short strike matching our time frame and target outlook. The time frame is going to be one word, always has been, right? So this way I know it's like, hey, I'm going to sell where I expect the stock to be on the date and the price I expect it to be at. Very simple. One thing, when I was going through the options courses myself, folks, decades ago, I believe Reagan was president. Okay, that was a joke. But anyways, long time ago, this for some reason was easier for me to pick up. The diagonal spread was the easiest combo for me to pick up versus any of them, because I understood selling my time frame and target. I thought that was pretty interesting. Depending, just a little excerpt for you. So, no news or earnings within the time frame. I'll put that in there as well. I don't really need to. Stocks. Now, the stock beta less than or equal to 1.5. You guys heard me on the horizontal spreads, folks, and anybody that's working with me, I don't really care. It could have a 5 beta. It can have a 0.2 beta. It doesn't matter. If the chart is consolidating, I'm willing to put this strategy into it. And the cool thing is, folks, the reason why I can is because You can make this as diagonalized as possible. I can go 1 strike apart. I can go 10 strikes apart. You can get as aggressive with these as you want to. So I'm just going to put, oh, look, there it is. I've already used it in a previous checklist. So I'll just copy, or just finish it off and go ahead and hit submit. And I'm going to leave the beta out because beta to me, once again, folks, doesn't matter. Any sort of extra notes you want to add for these checklist items, you guys can see that you can do that here. I would be as vanilla as possible, as neutral as possible, just in case you don't want to get into a strategy to where you put up the checklist and then you can't answer the checklist question, so you can't actually do it. So make sure you don't restrict yourself too much when it comes to this. Once again, they're just for reference, so keep that in mind. So let's go to configuration. I'm going to jump straight to the strategies. I'm going to attach this checklist to both. So let's start with the diagonal call spread. I'm going to go ahead and hit edit here. You'll see that we now have a diagonal spreads checklist. Go ahead and check it. You can see I already cut and copied the diagonal call worksheet into it. Hit submit on this. Let's go ahead and go to the diagonal print spread as well. And click on diagonal spreads checklist again. Hit submit. Now I've got checklists for both. Now, folks, I'm going to do something a little bit different. In the past, you've seen me go, let's go ahead and build a trade plan, where you'd go through here and say use existing or full trade plan. We'd build the trade plan for a specific trade, then we would execute it. I'm going to go ahead and just jump across this just to go trade without a plan. One thing is, when you do this, the checklist will not pop up. Remember that. But it's something that's a little better and a little easier to do when it comes to, hey, I've already got a trade on. I've already got the trade triggered. I just need to record what I've done. And if you guys remember from the horizontal spread class, we ran into a situation where we've got a two-tiered exit. We have an expiration date week or 2 or 3 weeks before a second expiration date. The limit of the trade bench, once again, is we cannot go in and make adjustments to an existing trade. Either you need to add something to the position, like another share or another contract, or you need to remove something from the position, another share or another contract. There's no way to log in, add notes, and then save and move back out. It won't do that. So the problem that we're going to have with this, as we did the horizontal spread, is when the front leg expires, there's no way to make note of it unless we add an extra contract. So that's what I did with the horizontal example. With the diagonal spread, I'm going to do something a little bit different. So first of all, let's see if we can go find ourselves a trade. And guess what? I found ourselves a trade. This is KTOS. I thought this was a pretty interesting trade for a few reasons. It gave us a limited amount of strike prices, which is ideal for something where it's like if I have to be in it for a certain amount of time and I've got limited choices, this is where the diagonal spread is awesome because, hey, I can sit in it as long as I want, as long as I'm selling something against it. So let's take a look at this. This is kind of a high base, kind of a symmetrical, no, I should say a high base, right around the 21, 23 level. Right, range bound. How about a high range? That's a good one. So let's take a look at what we have to choose from. As we jump over to the Analyze tab, you can see that we have just regular expiration strike prices. I chose this on purpose. Weeklies give us a lot of advantages. However, if you're forced to choose, in this case, we've got 25 days till expiration, and then the next one out is 53 days. Now, this might seem like a lot, but it's not that big of a deal if you could actually bring in a credit to reduce your exposure on the longer term. Let's say that I really wanted to be in this position, but I only wanted to be in this position for 30 days. Well, this is perfect because the 25 will expire, and then you'll have 20 extra days past that for the longer term to work for you. So these are neat. They're targeted. So let's go ahead and build the combo and see what we're left with. So the strike prices that we have are $2.50 a piece, as you guys can see through here. And let's make sure that the next month out agrees with that. Yep, they're both $2.50 a piece. So we want to buy something a little bit in the money there. And let's see if we can't target this bad boy. Let's see, it's at $22.50 right now. So I want to be a little bit more in the money. Let's see if we can do the $22.50 will work. Now we can sell at 25. I like that. It's only $2.50 up here. You guys can see that the target is going to be, here's 25 right about there. That looks really good. I like that. $2.50. We're not really asking for too much, but with the amount of time we have, it seems like the best choice for what we have. So I'm going to go ahead and buy the 22.5, and then I'm going to hold control here and see if we can't sell this. 25. And I'm going to knock this down to 1. And we've got ourselves a pretty decent little spread there. $1.40. I like it so far. Let's go to the risk profile on it. Let's shrink this down a little bit so you guys can see how it is. Okay, very nice. And what we always try to look for when it comes to the diagonal spreads is the upper leg not really going back down below the 0 line. We know we've done a decent diagonal spread is when it doesn't go down below the 0 line. Why is that? Well, let's say for some reason, guys, I mean, we're playing a pretty long spread here. We've got 25 days for the front leg to expire, 53 for the back leg. But let's say that in the next 15 days, this thing shoots up to $27 and $28. Well, the horizontal spread, as we learned in the past class, would really get hurt by this because it comes back down. The diagonal spread will compensate. And the reason being, we've got more time and we've got more delta built up in the back leg that we purchased with the 22.5. I'm not going to reteach the class. So just make sure, as just a side note, that you do have this type of risk graph. Okay, what we want to do is record costs and price. This is going to cost us $1.40. Now, one thing that I have illustrated in classes in the past, I don't think I did it with the horizontal spread, but it's a good idea to actually put in the cost of each strike price, just in case you lose track for the trade bench. So I'm going to go ahead and type this all in. Guys, I'm going to need a reference over here. Let me move this over. All right. And as always, we don't put in the KTOS and hit enter because that's going to give us the stock and give us which is great because it'll pull from the internet and give us a live updates. However, it won't make sense to us because we are actually not using just the stock. We are setting up a specific trade. So I'm going to put in 16 August. Well, let's start with the shorter leg. 19 July 25 / 16 August 2250 2019, just in case you need that for reference down the road. Diagonal call spread. Okay. Now we're going to pick our broker. I like to multiply it by 100. That's just me. Once again, guys, we've talked about this. You can leave this as 1 and then put the quantity in as shares. It's easier if you're using contracts to do this by 100, and then you can put in the contract size. Okay, so now once again, this is still a net debit. In fact, folks, the only time we've ever used short was for vertical credit spreads. So far. Wait till we get to the condors and butterflies. Let's move to the diagonal call spread. Put a selection. Notice that the checklist did not come up because, folks, for this example, and I go back and forth through these, I'm not going to set it up as a trading plan. I'm going to do it as an immediate trade. So let's go over to the order quantity part, and this is going to be $1.40. And let's say I want to risk $500 on this, so I'm just going to go 500 divided by 140, because that's how much it's going to cost, equals, sorry folks, let's see if I can do this again. 500 divided by 140 equals, I can do 3.5 contracts, so I'll just do 3, right? All right, that makes us $440. So I'm going to do 3 contracts. And the fill price, once again, this is an active live trade. It's already been we're putting it in as we go. So we're going to say we got it for $1.40. And then here's our commissions, rounded off to the 100th decimal. It's close enough. Target price and stop loss, I'm leaving it open. And here's why. Because if I position sized for max gain, guess what my risk is? Max loss. All right. So we'll keep that on in mind. Now let's go ahead and add some labels to this. This is definitely a +2. You could add a +1 too if you want to combine the two. Let's take a look at the chart. I know it's off screen, folks, but I like the consolidation, high basing. I'm just selecting the ones that I put in there. You can put in whatever you want, and that's good enough. Let's go ahead and get a copy of the chart there. Right click, copy, back to trade bench. Control V, hit the return button. Very good. Target, and this is kind of redundant, target of $25, obviously. Now, one thing that you could do, once again, I haven't done this in every one of the examples. I always say I leave it up to you guys to be as detailed as you want. But if you really want to, if you want to go back and put in specifics, I could say, you know, bought the 2250 calls for, let's see if I can get the price for them. Well, actually, I didn't get it all the way, but I'll go through the simulated part of it. So those are going to cost us about $1.80 for minus 180 debit, right? And then sold the $25 calls for plus, I'm going to say, well, if it's $1.40, it's got to be 40 cents. Credit. So this way you know that, hey, if one expires, I know exactly what it's going to expire for. You know, I get a 40 cents credit in there. If it's something you have to buy back, you can actually put that in there as well. Now notice in this scenario, folks, I didn't add the extra contract. Once again, for you guys who might have skipped over the previous video on the horizontal spreads, I would add a fourth contract here just so I can log into it and make adjustments based on the expiration of the 25s. In this situation, I'm going to leave it alone and just write down what happens from start to finish, kind of superseding or assuming, if you will, the any sort of adjustment or any sort of rolling. Maybe I re-rolled it up to the 27.5, so on and so forth. What's really cool about this, I'm going to go ahead and hit submit because I want you to know that when you close it, you can put all that in there. So I'm going to bring this back over as that is rendering. And we will assume a little bit more here. So let's say that this thing went up to, let's call it 2750. It got up to 2750 through the expiration, but we didn't have to buy back the original 25. You know, and so if you want to go net start to net finish, we would just find it first of all. TOS is right here, and we could just do this all on the exit. So add the exit order. So let's say 2750 with the 22s, 27.5. Sorry, folks, my math's a little slow. 22.5. That's $5. So I'm going to say order quantity. All three are gone, and the fill price was $5. Oh wow, we made a mess of money. Why? Well, I'll tell you why. So those were July's, right? The July 25 expired for max gain on expiration day. It held the 2250s, 2250 Augusts, and was stopped out today. So see what I'm doing here? I'm kind of assuming what happened. And as far as the ledger goes, I set it up as one trade. The expiration happened. I didn't log it, right? You saw in the horizontal stuff, folks, that when I did log it, it actually generated another commission because the only way to actually log it is to quote unquote sell something. So it didn't. Doing it this way, it doesn't generate that other commission. So I think it's a little bit more specific to exactly what happened. And remember, guys, TradeBench is a journaling software. You can actually go through your past trades and put these in one by one, and it's actually going to be a little bit more realistic than trying to follow them and adjust them as they go. Unfortunately, it's not conducive to options. And we stopped out today for $5 gain. Or what you could say, reached target today, whatever it is. Today. Okay, cool. Submit. There, now we got a finished trade. And you can once again, take a snapshot. I didn't do that here. Right click on the stock, put it in there as well, because here's my beginning setup, targeted 25, all my notes, and then here's my exit, and I could have another chart here and say it hit my target, so I took it out, and here's the breakdown of the trade. So, once again, Still works. Just wanted to make sure I gave you an example. Trust me, guys, you probably are pretty familiar with Trade Bench by now, and if there's a better way to do it, you're more comfortable with, please do it by all means. All this is just data. Just trying to track gain loss, how you did on whatever your checklists have. Well, more importantly, your labels. Your labels and your strategies. How many times did my strategies work? And the labels attached to it. High base, low base, +1, -2, all that other stuff. And it's just a journaling software, so keep that in mind. Thanks again for joining me, folks, and we will see you next time. Goodbye, everyone.